Ever notice how it feels like things just keep getting more expensive every single year? You go to the grocery store and suddenly your usual haul costs 20% more. Or your rent jumps up and it's like, where did that even come from? Sometimes it's even sneakier, right? Like your favorite snack costs the same, but you open the bag and there's 20% less in there. So, is someone secretly reaching into your pocket and stealing your money? Well, kind of, yeah. There is this invisible force, almost like a silent thief, and it's draining your bank account day after day, year after year.
The invisible thief, understanding inflation and wealth protection. Okay, let's dive into this. Welcome to today's Explainer. Think of this as a mini finance documentary where we're going to expose this invisible force that's actively shrinking your wealth. Yep, we're talking about inflation. We're going to break down exactly what it is, how it operates in the shadows, and most importantly, how you can build an absolute fortress around your money to protect it.
Part 1. The Invisible Money Thief, and how inflation quietly makes you poor. You see, most people get this kind of wrong. They just think inflation means things are getting more expensive, but that's really only half the story. What's actually happening is more like a hidden tax. It's literally making millions of people poor without them even noticing. Think about a crisp 100 rupee note, or a $100 bill, or 100 euros. The exact currency doesn't matter. The math is exactly the same. Picture what that single bill could buy you back in, say, 1990. You could probably load up a whole grocery cart, maybe grab a couple of nice dinners out, and actually still have some change jingling in your pocket. But today, man, that exact same piece of paper might barely cover a coffee and a basic sandwich. The physical paper hasn't changed at all, same ink, same size. But its purchasing power, it's basically evaporated. And that shrinking, that evaporation of value, that is our invisible thief right there, caught red-handed.
Part 2. Why prices keep rising. Let's look at the actual mechanics of the crime.
It all starts with the classic showdown, demand versus supply. Basically, when you have way too many buyers chasing not enough goods, prices are going to shoot up. Picture a highly anticipated new smartphone dropping, right? But there are only 10 of them available in your entire city. People are absolutely going to outbid each other, driving the price through the roof just to get their hands on one. Now, zoom out for a second. This exact same thing happens on a massive global scale. Remember a few years back when computer chips were super scarce? The prices of cars, both new and used, just skyrocketed. Millions of people wanted cars, but the factories literally couldn't build them fast enough. Same deal with housing. Everyone wants to buy, but there just aren't enough houses being built. When skyrocketing demand collides with low supply, the invisible thief has an absolute field day.
But wait, it gets bigger. There are 4 massive macroeconomic triggers that basically pour gasoline on this fire. First up is money printing. Think of your country's wealth like a big glass of pure apple juice. If the central bank decides to just print trillions in new currency and pump it into the economy, it's exactly like pouring tap water into that juice. The glass is fuller, sure, but the juice is totally diluted. The more money swirling around, the less valuable each individual dollar or rupee becomes. Second, we've got rising production costs. If raw materials, factory electricity, and wages all go up, businesses aren't going to just eat those losses. No way. They pass that bill straight to you by hiking up the price tag. Third and fourth, global events and economic crises. We live in a super connected world. If a giant cargo ship blocks a major canal, or a geopolitical crisis messes with supply chains, shipping costs go crazy. Suddenly, your local groceries or the gas down the street spikes in price overnight. These 4 forces are working behind the scenes 24/7 to fuel the thief.
Part 3. The hidden tax on you. Let's talk about the real victims of inflation.
Because here's the painful reality for millions of hardworking folks. Imagine an average worker doing a great job and they score a 3% annual raise. Awesome, right? They feel good, their paycheck is technically bigger. But the invisible thief is creeping in the background. That very same year, the rent hikes up 8%. Groceries go up 10%. Gas for their commute jumps 15%. The basic, completely unavoidable stuff to stay alive is getting aggressively more expensive. So even though they're making more money on paper, they can actually afford way less than they could 12 months ago. They essentially took a massive pay cut. And meanwhile, that responsible emergency fund sitting in a basic savings account, it's just melting, like an ice cube on a hot summer day. That massive gap between lagging salaries and skyrocketing costs, that's exactly where everyday wealth is just bleeding out.
Part 4. When money becomes worthless. Let's look at the absolute worst-case scenarios.
Now, real history paints a terrifying picture of what economists call hyperinflation.
Back in the late 2000s, Zimbabwe saw inflation so severe, the government had to print a $100 trillion note. Can you imagine? The money lost value so fast that a simple loaf of bread would double in price in a matter of hours. People were literally pushing wheelbarrows full of cash just to buy basic groceries. It's wild. More recently, in Venezuela, a similar nightmare unfolded. Prices doubling every few weeks, just completely wiping out the life savings of the entire middle class overnight. Nobody trusted the currency anymore. Now, these are extreme historical cases, for sure, but they're incredibly important warnings for this documentary. They show us exactly what happens when the invisible thief is allowed to completely consume an economy, completely unchecked.
Part 5. How wealthy people protect money and building your defense.
All right, enough doom and gloom. Let's pivot to some real empowerment. The biggest mindset shift between the wealthy and everyone else, it comes down to saving versus investing. Traditional advice always says, hey, keep all your cash in a savings account. It's super safe. It feels safe, right? It's insured, the number never actually drops, but as we're seeing today, it's completely exposed to this wealth erosion. Let's just do the math real quick. If your bank pays you 1% interest, but inflation is running at 5%, you are guaranteed to lose 4% of your purchasing power every single year. It is a slow, mathematical certainty that you are losing money. Investing, though, that's your armor. The wealthy don't just hoard cash under a mattress. They view their money as little soldiers, and they actively deploy those soldiers into assets that grow faster than the thief can steal.
So, a classic, time-tested strategy the wealthy use is diversifying across real, tangible assets. Let's look at why these specific ones work so well as a shield. First up, stocks. When you buy into broad index funds or solid companies, you own a piece of a real business. And what do businesses do when inflation hits? They raise their prices. So, as an owner, their ability to pass costs on actually protects your investment. Next, real estate. Not only is it physical land that usually goes up in value, but if you buy it with a fixed-rate mortgage, oh man, you are pulling off the ultimate inflation hack. You're basically paying back your massive loan over 30 years using tomorrow's significantly less valuable money. You're literally letting inflation eat away your debt. Plus, your rental income goes up with inflation. And finally, gold. For thousands of years, humans have just agreed this shiny metal is valuable. When paper money gets wobbly and central banks overprint, gold historically holds its ground as a safe place to park your purchasing power. By layering these different defenses, you're shielding your financial future from getting wiped out.
Part 6. The ultimate financial lesson for securing your future.
So it all comes down to this single, incredibly powerful thought. Inflation is unavoidable, but losing your wealth isn't. Look, you can't stop the global economy. You definitely can't stop central banks from doing whatever they're going to do. But you absolutely have control over how you protect what you earn. People who truly get money, they don't just stress about earning a bigger paycheck. They actively defend the wealth they already have. So as you look at your own bank app today, you really got to ask yourself, are you going to let this invisible thief quietly empty your pockets year after year, or are you going to start building your financial fortress right now? Think about it. Thanks for tuning in, keep learning, and I'll see you in the next explainer.